Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 0.65% to 39,406. Ethereum up 1.19% to 2626. My goal is to bring you the highest quality crypto trading videos to assist you to be more of a financial blessing to yourself and those you love. When we look through the crypto market, we can see basically Bitcoin is coming down, but we have a couple of standouts. Phantom up currently 11.03% and the Graph up 16.55%. If you're going through a life pullback at the moment, please know that our community's love and healing thoughts are with you. You're not alone. The sun will come out again, and there's always hope. We're going to do today's video a little bit differently. I'd like to break the news up into rocket news and chicken little news, and I'll explain that in a little while. Rocket news, of course, it's about a rocket. To the moon, baby, only up. The truth is, there's always up news, there's down news, and there's meh kind of news, which is pretty flat. And as crypto technical analysts, we know what we will do if the price goes down, goes up, or goes sideways. We look at this particular path of action just before we place any trade or any investment, and we know all investors become traders anytime they buy or sell. Okay, let's get into the rocket news. 375,000 Bitcoin has left Coinbase since April 2020. That's pretty bullish. When you see Bitcoin leaving exchanges, it basically says they're not there to sell it. They're taking it off exchanges. And a really interesting thing is 10.8% of the active Bitcoin supply is now held by crypto exchanges throughout the world. That's a pretty low amount. And that particular article is talking about this Glassnode statistic, and we can see this stat coming down and down and down. This is on Coinbase, and we can see on Binance, which is the world's largest exchange, it's also coming down in this particular direction. Hubei is also coming down, and we can see a lot of really interesting stats. I'll come back to those later, but the concept is the Bitcoin on exchanges is on the way down. And that's really good, because when people are actually transferring their Bitcoin to exchanges, it's generally to sell it. Crypto technical analysts always look for consistently reliable signals. Sometimes on-chain data is a little bit iffy in the signals it throws out for trading, and trading is all about timing the market. Let's have a look at the next piece of news. Stellar has got a $30 million fund. Oh, very nice of Stellar to do that. And it's looking to co-invest with startups with real-world use cases to help people actually buy into the Stellar network. Well done. Co-founder and CEO of Ripple, Brad Garlinghouse, has come out and said the absolute obvious. XRP is sanction compliant. Basically, what Brad's saying is that the crypto exchanges already have know your customer and anti-money laundering provisions, and they're just going to be abiding by that. One really good piece of news is that CoinShares launched physically backed Cardano ETP with staking rewards. This is great because they're actually going into the market and buying ADA. We've seen ADA start to turn around, start to bottom recently, and this could be something to do with it. On to more rocket news. PayPal CEO Dan Schulman said something really interesting, that crypto will redefine the financial world going forward. That's a pretty big statement. And he knows what he's talking about, because PayPal has always been a digital platform. And what Dan focuses on is, he says this, to me, the real exciting thing about digital currencies is what kind of utility they can provide in payments. There's a lot to come. And these comments come just months after PayPal launched crypto buying and selling in the UK. And we know the UK is pretty stringent with its regulations. Something really fascinating. Binance and FTX have open doors for their crypto exchanges in the Middle East, And this is really interesting because the Middle East is basically the linchpin of the euro dollar. A lot of people don't understand what role oil plays in propping up the US dollar as a reserve currency. I'll actually create a special video on that. I think it's really, really important to understand the role of oil and how it's shaped economic fortune throughout the years. What we're actually seeing here is the new oil is digital payment, and the Middle East has basically said, okay, welcome Binance, welcome FTX. And this is in stark contrast to Western economies such as the US and the UK, which are basically saying, get out of here, crypto. You threaten our banking system. And the Middle East is saying exactly the opposite. Binance won approval from Bahrain's central bank to provide crypto services. If you think about this, and Binance is going to actually operate in the Dubai World Trade Center. The Middle East is quickly realizing this is the new oil, the payment rails of the 21st century, and it's seeking to lock that in play. I tell you what, the world better catch up really quickly. One fantastic piece of news is that the Ethereum merge upgrade is cooking with gas. Basically, Ethereum wants to transition away from proof of work to the more energy efficient and higher transaction per second proof of stake consensus algorithm, and it's just rolled out Kiln, which is a very big step in that process. They expect that the merge will happen around June 2022. Ethereum currently has around $109.78 billion locked in DeFi protocols, giving Ethereum approximately 55% share of all DeFi smart contract platforms. Total value locked in DeFi is $199.55 billion, and it's starting to grow. It's starting to recover. When we look into the market, we can see, of course, everybody's gravity in the crypto market, well, at least the altcoins, is influenced by Bitcoin's gravity. But what we're seeing as well is Ethereum has a bit of overriding news, which is really great for Ethereum. Ethereum is an institutional grade investment vehicle as far as crypto. It's right up there with Bitcoin. These are the two major ones that institutions look into, and Ethereum has the better returns. Turning now to Bitcoin, we can see Bitcoin currently trading at 39,335. It's still under a degree of resistance. It hasn't broken out, so it's still under downward pressure, but it's got more upward pressure than downward pressure at the moment. We could expect that we would get a breakout from this resistance, and that will be confirmed when we pass across 41,000 in terms of trading. If we still maintain a negative bias, we could come down to 36,694 or 35,227, and we have to look into the market as to what Chicken Little, and you know Chicken Little, that's the guy. Sky is falling, the sky is falling, everything is bad, it's going to blow up, everything is doomed, kind of like Dr. Smith in Lost in Space. One thing that we know as crypto technical analysts, there's always good news in the market and there's always bad news in the market. What we want to see is how the top cryptos are reacting to Bitcoin's price movement at the moment. We can see the pattern of Bitcoin's price action. How is that pattern actually playing across your beloved alts? Looking into Ethereum, we can see Bitcoin's price action in blue, and you can see it across Binance Coin, XRP, ADA, Solana, AVAX, and Luna. What do we see here with Ethereum? We can see that these top cryptos are moving in alignment with Bitcoin's gravity, sometimes above, sometimes below, and we can note that when we get divergences, such as what happened recently with XRP, and this is really interesting. A lot of people were saying XRP is going to the moon, and I think it's going to do quite well actually, but the concept is we always buy at levels of support down from the current price. What you will actually find in when you get these big spikes up in price, they are generally unmaintainable and they will decay like this. For example, in Solana, unmaintainable, decay. And it also applies to the downside, unmaintainable, expand. That's really good for you to look at, that relationship between implosion and explosion. I'm really liking the look of ADA at the moment, and that piece of news for Cardano is really, really good as well. That's a spot ETF. And what that actually means is that people are actually buying. They're taking delivery. It's not a derivatives contract. It's not price related to a change in an underlying price of ADA, for example. They're actually stacking ADA. And this is really, really good for ADA. And we can see Solana had a bit of a spike up here. Good on you, Solana. And AVAX, what do we see? A spike up. Because what happened? Bitcoin spiked. When Bitcoin spikes, 99% of the alts will spike with it. What are we actually noticing in here with Luna? Let's drill in. We can see some things that I was talking about earlier. You remember when we were about here? What was that? The 10th of March. I said, let's come back to Luna within 14 days. And I would estimate, based on the price behavior, that we may see some downward pressure. We certainly saw downward pressure from there, bit of a spike, but now coming down. What we're actually noticing is that Luna is starting to fail on its support levels. When a support level actually fails, it will tend to go down to the next support level to accumulate strength. It's also important to consider the context here. This purple dotted line is the all-time previous high. That all-time high was breached, and then we had a minor retraction. I put this 14-day in here because what typically happens is that when you come up to a previous all-time high, it has a little bit of trouble getting through it, and you would anticipate a retracement. A lot of people get really excited when they see an all-time high getting reached, and they pile in because they think the certainty is there. If you put $10,000 into Luna at that point, you would have now lost $1,545. It pays to know the rules of the market. We can see the market is basically following Bitcoin's price action. So what is the Chicken Little news? What do we have to deal with on a negative front? And remember, we don't actually get caught up in the emotional content of the market as crypto technical analysts. We just apply science and rules. When it comes to Chicken Little news, it's all about the sky is falling, everything is doomed. Okay, let's check it out. What could that be? Unfortunately, Chicken Little is a pretty powerful little bird. Actually, he packs a punch. When we look at the FOMC meeting at 2 p.m. today, the Fed will, in all probability, hike interest rates for the first time since December 2018 and raising the federal funds rate from 0% up 25 basis points to 0.25%. Some people have been expecting a 50 basis point, which is a 0.5% increase. It's probably more likely we'll get that 25 basis point increase at the moment, but we can just keep our eyes on things. This could be a Chicken Little moment. If you go across to the federalreserve.gov, you'll see that 2 p.m. meeting, 2-day meeting, March 15th to 16th. If the Fed actually increases by more than 25 basis points, we could have a Chicken Little moment in the market where we see negative price momentum. But just beware, this is already pretty much priced into the market. I know a lot of people say it's not, but the Fed has done a very, very good job of alerting everybody way ahead of time. And the people out there, economic commentators, financial commentators, say that the Fed is always behind the curve. It's so slow to act. That's because if it goes ahead of the curve, it actually causes widespread panic in the market. It has to be very very clever, and very careful about what it says. Okay, next piece of Chicken Little news. China's stock market plunges, 10 cents gets hammered, COVID cases are surging, lockdowns are occurring in Shenzhen, which has about 13 million people, and it's home to Foxconn, who makes the iPads, Apple products. Shanghai, about 28.5 million, and Jilin province, about 24 million people. They're all under lockdown. Hong Kong, its December cases were 700,000 and the world's highest death rate. There is a big outbreak in China at the moment. And there's a lot of economic commentary that the support of Russia may be too expensive for China to handle and may actually destabilize Xi Jinping's reign over the CCP. All of these things remain to be seen, but certainly there are a lot of COVID cases now in the world. The thing to note is that C19 has never gone away. It's always been increasing. Around the world, we have 461.5 million cases and nearly 6.1 million deaths. It's just a tragedy. And we can see that we had the first, the second, the third, and then the fourth wave, which was absolutely horrible. But what they're saying is that we may be coming into a fifth wave, which could be even more devastating. Hopefully not. One of the good things is, even though these particular waves of new infections, we've seen the death rate come down. Even for this really, really big spike, it's good to see the fewer and fewer people are dying. That's what it's all about. We don't want anybody to die from any disease, full stop. When we look at yesterday's case figures, this is not bad. I remember reading our case figures that were 3.5 million plus. We've only got 1.3 million new cases yesterday. When we see news like this could further add to inflationary pressure. We just have to keep our eyes on it. But what may happen is that the Fed may basically say, we're going to just raise interest rates by 25 basis points. It could go in harder because we could see supply chain shortages around the world. It's just really up in the air at the moment. We just have to wait and see what happens, and we don't have long. Some interesting news floating around is that Russia will be in default if it doesn't pay this 117 million of USD bond repayments. And you can see here that the bond repayments, there are no alternate payment methods. They can't use Great British pounds or euros or anything else, Swiss francs or rubles. They have to pay in USD. And this is really interesting because there's always a 30-day grace period for the first default. But what has actually happened when the US leveled sanctions against Russia and froze its foreign exchange reserves? Do you think for any second that Russia would turn around and say, oh, you know, I don't have much money left, but I'm going to service this interest payment? Would you? I don't think there's much of an incentive on Russia to come to the party with this one. They could just say, hey, you know, all those foreign exchange reserves that you froze, just use that and pay yourself. Could be. But the interesting thing, the Russian finance minister said, yes, we're going to pay, but under Directive 4 of the Executive Order 14024, the banks may not be able to actually receive payment. There's a potential workaround through General License 9A, but it could be some kind of a moot point. I think the financial press is going to have an absolute field day with this. From May 25th, there's a conversation that basically US banks will be prevented from getting any receipts, and that we're talking about a lot of money here, billions of dollars from Russia. But yeah, this is basically the situation that we find ourselves in. It's not business as normal. What we're actually trying to do globally is stop World War III. A lot of people are looking at this Russia default, potential Russia default. It certainly hasn't happened yet. And if it does, it will happen in a month's time, April 15th, because of the 30-day grace period. The last time Russia defaulted was 1998, and that was in the heart of the Asian economic crisis. But just bear in mind, these are not normal circumstances. Economic commentators may look back in history and say, oh, this happened last time Russia defaulted, but this time is completely different. As a planet, we're actually trying to avoid World War III and the use of nuclear weapons. This is good. If some bondholders don't get their payments, I think that's much better than not being on the planet or at all. Let me know what you think in the comments section. I think this is really good to talk about. As crypto technical analysts, we don't really care what the news tells us. We care what the charts show us, because the charts are price reality. They're not fantasy. They're not fear. They're not sensationalism. They're actually what is happening. And when we look into the fear gauge of the stock market, and we look into the US market, because it's such a large market, it dwarfs all other stock markets. And why do we care? We're in crypto. Shouldn't crypto be decoupling from the stock market, as some of these crypto champions say? The answer to that question is, of course not. All financial markets are interdependent. All of them are. They don't decouple at all, even when they're massive. The stock market and the bond market, these numbers are in trillions of dollars globally. They're tightly associated with each other. And we look at crypto under 2 trillion. It's literally a babe in the woods. A lot of people are talking about the adoption cycle, or the S-curve. We're so early in crypto. We're literally at the dawn. It's like literally the door just opened on the house of crypto, and a small number of people, including yourself, including those very forward-thinking, absolutely brilliant people like yourself and the other people that you know in crypto, they're coming into the house of crypto, and they're going to party for a long decades to come. With this in mind, we know that the actual stock market will impact Bitcoin's gravity, and Bitcoin's gravity will impact your beloved alt's gravity as well. We can see the fear coming up. It's starting to recede a little bit. This is great. We really want this fear to drop down, and when fear drops down, it can drop down sharply. I think the Fed, FOMC, is the major thing that the markets are actually fearful of at the moment. And why do I say that? Why do I say, well, what about Russia and Ukraine? Surely that's a really big problem. If it was a really, really big problem, gold would be spiking. Poor old gold, look at that. Peter Schiff must be beside himself with anxiety. It reached 2080, and now it's down to 1924. I was trying to warn people, when price goes up the wall, it retraces very violently. Up the wall comes down as well, and especially in the stock market. When we look at oil, many people were saying oil is just going to explode. $150, $200 a barrel, $300 yeah, no, not quite, because what actually happens is that things need to normalize. I think we could get a technical bounce coming through here, because we see a support line. Just please bear this in mind. It's really, really important. You do not want to get trapped right at the top over here and then have to wait. Literally, it could be years, especially inside the stock market. The stock market is very unforgiving. Crypto is just gorgeous. Crypto is the best market ever on the planet. Why is that? Because you can get trapped into a high price, and it does happen. Every trader and investor can get trapped occasionally, and that's not a problem, so long as you're lowering your average buy price on the way down. But the concept is, if you do get trapped, crypto is so forgiving, it's so kind, it's so sweet and gentle. Basically, it says, okay, you suffered enough, I'm going to go up now. Unfortunately, the stock market is not the same. It's very, very slow to move, and you can wait years for things to turn around. I'll give you a quick example. Just look at gold. That previous all-time high, it was nearly reached again 578 days later. And then what did it do? It said, nah, I'm out of here, and it collapsed. Getting more specific when we come to gold, I believe that this particular area just here between 1833 and 1920 is a quite good buy zone. We have a lot of undercurrents of support. We've got a bit of a cradle in here as well, and the long-term outlook is for gold to go up. But let's see, if we actually bought, for example, if we bought around the 1886 mark and just sold for 20.74, what would we get? Just a little under 10%. I want to show you something quickly. I was actually saving this for later in this video, but I think it will help you a lot and to understand the difference between the stock market and crypto. Every day I look through a wide range of cryptos, in fact hundreds, trying to identify undervalued cryptos and get entry positions into them. Let's have a look at graph. I identified that GRT was selling off extremely and layered a position in and then added to that position. I'm just going to drill in here. What I did was I sold one position, the one from 32.68, and made a $377.87 profit on that for $1,000 US. The concept is that all took 3 days to do, 27.45%, and we're talking about getting a 10% return in gold, and that would probably be over the next 6 months. As a previous gold trader, I don't find much of an attraction for gold, except I love gold and gold is beautiful. It's very shiny, nice material, but the concept is when it actually comes to having a return out of something, I just really don't like it that much. I'm just not interested. Because crypto came along, one thing that I'll share with you in the description of this video is the tax software that I use. You can see that not orders get filled, not all orders get 100% filled. This was just one order and it got filled in many levels, and you can see the profit next to it down here in this column. All of these profits coincide with this 377.87, and what I want to show you is something really important, and this is a fact that all crypto technical analysts understand. What we actually did, this is in Australian dollars, 1376, 1,000 US dollars, and I actually got a $7.55 foreign exchange gain from AUD to USDT. So that's also recorded by this software. The concept is this, in the span of 3 days, this $1,300 went up to $1,754 and returned $377, which is a 27.45%. Now this annualized return on investment, I just say that's a rubbish return. Anybody could get that, would just be the king of the world. I don't think that is attainable, but certainly we do a lot of these trades and I show them and share them inside the masterclass. It's not really a thing that you have to wait a very long time in crypto, and if you can continuously turn over, it doesn't have to be 30%, it can be 5%, 10%. A lot of people go for 2%. Those things are absolutely doable in crypto, but only if you have the rules and the knowledge. And that's what we share inside the masterclass. I just wanted to show you that you can actually make really good returns. And have a look at this. If I just take these guys down a little bit, when we actually have a look at what the graph has done, I'm very transparent with my trades. I actually show all the levels and I get the screenshots from the exchange and do all of that kind of stuff because I really want people to understand how things work. What we actually see here is that the graph actually came down 89.51% over 377 days. If you were an investor in the graph, you would be pretty upset with this kind of negative return. That's why it's always a trader's market, because we're in and out, especially of these spikes. I love spike trading, and that's something we talk about inside the masterclass. And I still have another level and to actually sell inside GRT, and that's just sitting patiently inside the market at the moment. But you think about it, going down 89.51% and turning a 27% profit in 3 days. It is absolutely doable. It doesn't matter how things come down. It matters about the wave. It's all about the wave. If you go back to yesterday's episode, I outlined OGN as a potential power play, and Rune, and a couple of others in here as well. We've seen those ones rally up well, and we can see Phantom starting to go for it also. What happens is that when prices go up parabolically, like gold and oil, bond prices, the US dollar, all of these things must retrace, but it goes the other way too. If you have the skills to pick these particular spikes down and know when to get into them, you can see just with the graph, that was only 3 days and quite a nice return, and that particular trade is still running. As crypto technical analysts, we have a very, very scientific approach to the crypto market. I developed a special technique to actually determine exponential price action. And what it does is it actually upgrades all of candlestick pattern analysis. And that's been in the market for hundreds and hundreds of years. In the past, I've written books that have upgraded management science and also finance and risk management and a couple of other things. But the concept is that when I applied my invention into the market, what it did was to create a particular way of looking at the market that gives you an edge. And that's what it's all about. Of course, we then look to outside trends. We know that the crypto market is really tiny. So to time the crypto market, we must first look outside the crypto market. And we need to be aware of the rocket news and the chicken little news, the FUD and the FOMO. We need to check world events, collect probabilities, and understand how they may impact crypto. So I'll get back to that in a little tick. But the concept is, when we actually look inside crypto, opportunities reset daily, but we must have the right emotional mindset. We must control our fear. And more importantly, we need to live with high quality values such as integrity and kindness. These things are really not optional if you want to have a good life, and that's what it's all about. So real wealth is absolutely critical. And then when you've gone through this entire process, that's when you buy and when you sell. What happens is people, when they're new to the crypto market, they just come in and light switch. They buy when it's green and they sell when it's red. What we do as professionals is to gradually come in and gradually exit a position. And it depends how low the price goes, how many times we can get fills on our positions. And you can see just how significant the understanding of percentages actually is when you understand how you can gain just a little bit of a percentage in a short amount of time, and that can translate into all the X's that other people talk about when they just hold on for dear life and they just don't know when to sell anyway. There are definite ways to lose money inside any financial market. Being in zone 1 and zone 2, loss of money just comes with it. Being in zone 3, which is all about patience and rules, that's how to make money. What we do as professionals is we buy on red. And of course, the most important thing is zone 4, mastery of fear. But it's also having a good life, being a good person. These things really, really make a difference. Having love and friendship and all the good things in your life, you deserve that. One of those rules, a really important rule, is rule 19, sharp angles reverse. Back on around the 4th of March, I was actually cautioning people, be careful, things are getting overextended. It's very likely that prices will come down, and that is exactly what we've seen. I'm talking specifically in gold and oil, and you can see things can take off, but professionals have caution around these particular times, because as soon as people feel absolutely certain about something, and a lot of people feel really certain the markets are going to tank, take that as a sign it probably won't happen. If we just zoom into oil at the particular point, I was warning around the 5th. From around the 7th, it reached the highest point, but down to the lowest point, it was a 28.32% decrease. You really have to be careful when things take off exponentially. You have to be careful. Can you imagine if you actually bought $10,000 worth up here, and then 2,832 dollars later you were down here? Maybe we'll just add it up to this particular point. That's still 25.62%. To have lost 1/4 of your investment buying when everybody else was buying, when you were certain, wow, that is a recipe for losses. This is why it's so important to master your emotional state. If you want to master the market, you must master yourself first. And we have a lot of rules how to do this inside the masterclass. So what do we feel the crypto market is actually going to do? Now that we've got the good news and the bad news, that we have some kind of context, what do we notice here? The first thing that you should notice is that there's a very good line of support coming up through here, and that's an upward support line. It's not a downward support line. It's actually angled up. This is really, really favorable for the entire crypto industry. And what do we notice here? There's a resistance line that we must overcome, and we will have done so when we trade above 41,000 consistently. Overall, the only real spanner in the works that we can see right now, the thing that has the markets a little bit on edge, is the Fed. And if they come out and Jerome Powell says 25 basis points, and that is fine, and then we may do more, 50 basis points, in the next meeting, in the next 3 months after that. Well, okay, I think that the market would understand that, because inflation is pretty much out of control. And we can see inflation, just how the forward expectations, the break-even inflation rate on the 5-year is just going parabolic at the moment. Jerome Powell may do what the Fed has done many times before, threaten. And if they do so, the markets tend to react, tend to counteract, and actually price in downward momentum. That's what we saw previously in the break-even inflation rate. But for crypto, inflation is absolutely fantastic. People will actually get into crypto as a way to avoid inflation. And you can just think about inflationary countries where the inflation rate is just going parabolic, where they're literally using, when countries experience hyperinflation, they need so much money to buy literally anything. Hyperinflation looks like this when you need so much money to buy just the cheapest of everyday items. Well, maybe toilet paper is not so cheap these days. And these pictures are really very sad, actually, in so many ways. These pictures show just how much cash Venezuelans need to buy even basic necessities. So, for example, chicken. Look at all that cash. Crypto solves this. We still have a lot of positive momentum inside the market. Please let me know what you think. Are you bullish or bearish? Do you think we're going up? So you're bullish, the prices will go up, or bearish, you think the prices will go down? I did a quick poll yesterday on Twitter. What do you think Bitcoin will do in the next 24 hours? Up we go, bullish, about 32%, say a third. Thought we might go up, flat, meh, about 40%, and the remainder, down we go. And if you want to hook in and have a chat, just reach out to me at StanfieldKen, STANDFIELD Ken, on Twitter. Always great to hear from you. And I just picked up one of these ETH addresses. So I just want to thank the community member who reached out and said, Ken, why don't you go and grab that thing? That would be pretty good to grab. He's a very kind person. Thank you, my friend. It's very nice of you. And the thing that I wanted to note and actually to pass on to you about that, if you want to go and mint Ethereum NFTs or domains or anything like that, the gas fees are really, really cheap at the moment. It could save you a lot of money just right now. Let's see, some things are good with Ethereum coming down in price. I've left the link of the taxation software in the description of this video. It's the best I've found. And I've looked through pretty much all of them. There's always money to be made in the crypto market, and the crypto market is really forgiving as well. It's highly, highly volatile, but when you learn the rules of that volatility, you'll become much more of a financial blessing to yourself and those you love. And personally, I think that trading is a far, far better thing to do than investing ever is, because you can just get however many X's that you actually want, but you also learn how to buy and how to sell. I've often said buying is the key to profitability. I think this particular example shows it quite well. If you would like to learn more about the CryptoTradingKS Masterclass, please click the link in the description of this video, which will take you to www.cryptotechnicalanalysis.org. There you can see the testimonials, feedback of how people have found the masterclass, and I think it's really important to understand the reason that I created the masterclass. It will provide a lot of understanding as to why I share so much. And I know that most people that do classes don't share 5% of what I share. I'm sharing it all with you. And also, please reach out to an ambassador. This is a Rolls-Royce technical analysis class on crypto designed specifically for crypto. And it's got a lot more in it than that. And if you read through some of these particular comments, you'll gain a bit of an understanding how different people have found the content. The masterclass does not assume any previous knowledge, and when you come across to ambassadors, this is the highest honor in crypto technical analysis, and people have to do the masterclass to get it. If you reach out to any of these official CTKS ambassadors, you can contact them on Twitter and they can provide you with an 80% off link. I just wanted to let you know that I'll be actually releasing the names of new CTKS ambassadors shortly. And I'll be releasing it on this website, www.cryptotechnicalanalysis.org. Congratulations to all the ambassadors. You really deserve the highest of praise. I hope you found the content useful. Please consider sharing and liking this video and subscribing to the channel. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for mentoring masterclass students. Students, when you go through an ambassador, you can reach out to them anytime and ask them questions. In fact, all the ambassadors are really, really happy to answer any questions. They're just wonderful people. And of course, a really big thank you to you for watching and being part of our global KS family. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the link to the CryptoTradingKS Masterclass and also that tax software that is absolutely the best tax software on the market that I have found. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.